Hey everybody, I'm Jer. Welcome back to Stock Voyager YouTube. Today we're going to get back to basics and we're going to talk about fundamentals. Stock fundamentals, okay? So, let's go. All right. We are going to look at Walmart's fundamentals, their stock fundamentals. You will have people who will tell you that fundamentals don't matter, that revenue doesn't matter, that revenue multiple doesn't matter, that profit doesn't matter, that the amount of shares a company has on the stock market doesn't matter. And they will tell you all of this. Oh, and that the stock price doesn't matter. They will tell you all of this while their stock that they're trying to push is trading at 20 times revenue or 290 times profit, and they'll be like, yeah, it's okay, just stay in. The reason they want you to stay in and not worry about fundamentals is because they are pushing for a chance to get out. Like, they're obviously in too. They want to see if they can push it up a little bit more and then all of a sudden get out and see if there's enough people that will get stuck in that stock that they were pushing, that they were saying fundamentals don't matter, and then get out, take the profit from the dumb people who, well, I hate to say that, uneducated, undereducated about the stock market, people who don't know what they're doing. They're not dumb, and I think that they probably look at the people like they're dumb, but I think that they take advantage of the people who don't understand stocks and investing and fundamentals, and who won't even care about fundamentals because they don't know what fundamentals are. So I want to do a video and I want to talk about fundamentals and why they matter and when they definitely matter, and what you need to be watching out for. A lot of times, whenever I talk about stocks that I'm considering investing in for a decent amount of time, or that I'm swinging, or even if I'm trading a stock, I will talk about the fundamentals that I see. There's one exception to when fundamentals shouldn't matter really at all. They matter, but they don't. And that's in a short squeeze. And that's whenever, excuse me, a stock is like obviously has bad fundamentals, and shorts are like taking advantage of that. And then enough people get into the stock to make shorts have to cover. And whenever shorts have to cover, it sends the stock price up. Excuse me. And they obviously, then the people who are in it can get out, take their profit, and usually be done with it. Hopefully, not getting stuck holding the stock for a long time. That is when fundamentals really don't matter hardly at all. Like, you need some fundamentals, obviously, but it doesn't matter. That is really, to me, the only time that fundamentals doesn't matter at all, or don't matter at all. Okay, so we're going to look at Walmart. I personally, the biggest factor for me, this isn't for everybody looking at fundamentals, but the first thing I will look at is I will go through and I will figure out what the revenue multiple is for the company. That's the first thing I will do. So we're looking at Walmart. We're looking at it by quarter. We're not looking at it by annual, because annual will give you, like, we're in 2022 right now. Annual will give you 2021's numbers, but you can get, well, it looks like annual right now will give you, I still will usually just do quarters. Okay, so I will start with the last 4 quarters that have been reported, and I'll do the math. So we do 152 billion. So we're going to go put this in, which we may end up being at the annual anyway. I still just do quarters. 152 billion. Why is that? No. Why is that putting the... I'm not doing zero. Okay, that's fine. Yeah, so 152. 100,000, 100 million, 152 billion. Okay. 138 billion, so a little bit of a drop off for April's reporting. Is this 100? 138. We're just going to say 138 billion. So plus 138 0, 0, 0. Okay. They came back up there. Still not that 152 billion, but 141 billion. Plus, did I say 141? Yeah, 141. And then plus 140, so a little bit of a drop off from the last quarter. So 140. Where are we at? It's not, that's 140 million equals. Okay, let's do 1, 2, 3, 571 million. That may be the same number they did for annual. No. Okay, so we're using the quarterly. Okay, so 571 billion is what they made in revenue the last 4 quarters total. Okay. Then what we're going to do is we're going to go back here again, and we're going to go up, and we're going to look at the market cap. Market cap is 401 billion. So they aren't. Huh. Okay. And what was it? 401 billion. Okay. 401 billion. Wait. That's incorrect. We are going to do... Sorry. Okay. We need to do 571 billion, which is what their revenue is. Is that correct? That can't be correct. 101 billion market cap. And we're going to do 571 in revenue. So yeah, okay. Is that correct? Yeah. Okay, so 401 billion, and then we're going to divide that by their 571 billion in revenue. So they are trading at not quite 1 times revenue. Now then, so that's all important, of course. So that is what they are trading at. Sorry. That is their revenue multiple. 0.7 is a revenue multiple. Now then, and that is taking into account the revenue, yeah, and market cap. Okay, so now then, we will do profit. So they lost 2 billion. Yeah. Why is it not letting me delete? Okay. So they lost 2 billion. Plus 2.73. plus 4.28. Plus 3.11. Yeah? No. Wait. So they made 8.1 billion. So this is where the revenue multiple makes more sense to be low, because for the last 4 quarters they've only made 8 billion, while they had um that, what was it, 500 and something billion. So they're making a 2% profit margin there, 3%, 1%, negative 1.37%. So if you did all these, it probably comes out to about like 2% profit margin. So a profit of 2% is not that great. It's still profit and it's income, but that's not like tremendously great. So that is why they trade below the 1 times rev. They have 16 billion on hand. So yeah, that is why they're only trading at. So looking at fundamentals, you can kind of figure out why they're only trading at, and that's because of the 0.7. I would say they could probably still trade at, what is there? So whenever your profit margin is that low, it's kind of hard to justify like larger revenue multiples. I would say that they're probably worth about 500 billion. So you could see probably a 20% increase on this. Probably, I think, would be fair. But I wouldn't try to get this one to 10 times revenue, just because they are not making. What Walmart needs to figure out how to do is to make a larger uh, profit margin, because this is not like 2% isn't much of anything. So they need to figure out a better way to make profit, because this is nothing, like that's not much at all. Um, and you can see that their year over year net profit margin isn't great. Like they lost 146% of their net profit margin from the year before, lost 33% in this quarter, lost 35% in this quarter, lost 41% in this quarter. So it's just not, that's not wonderful. That's not great. So I can see why they're trading right below the 1 times revenue. Like Walmart has a lot of money coming through them, but they're not making a enough profit on that revenue. So you can have trillions of dollars of revenue. That means you've touched $1 trillion, but if you're only getting to keep 1 billion of that or 10 billion of that or whatever, it kind of doesn't. It's not much compared to what you've touched. So this is why fundamentals beyond even like the revenue multiple matter. Is the company that you're looking at profitable, and how much profit are they making on whatever revenue they're pulling in? So those things matter. Do I think Walmart might be a little bit undervalued? Maybe a little bit. Walmart's big revenue right now is because of um, I would think it's because people just don't have other things to, like, people aren't traveling, people aren't, because of COVID, so they just order their groceries. Walmart has gone into food delivery now. I don't know that they're going to make a huge profit off of Walmart Plus yet, and they may even be losing money on Walmart Plus. I don't know. But I would definitely say that Walmart's probably worth a little bit more than where they're at, probably about 20%, in my opinion, um, but not much. So you could probably see them going to 170, maybe. Wait, yeah, about 170 on stock price if there's not more shares offered. Um, so you would like take 20% of that, 28 on top of that, but I don't expect them to go much higher than that unless they can figure out how to get their net income up, because they've got to get expenses down, get net income up. So like they're everywhere. So, but they just need to figure out how to do that, how to get their net income up to be able to see more value out of their stock. Now, this isn't saying that they haven't done really well over the years with their stock. They have, because I remember when Walmart stock was like $50 a share, and that was normal. Like if we look at the 5 year, they've kind of gradually worked their way up to this, but I think that they're kind of evening out and flatlining now. And the thing that's going to push them up higher is if they can get their profit where it needs to be and start seeing larger uh, net profit. Yeah, so that's looking at the basics. Like we can also look at so fundamentally we can look at what's ahead, and we can look at news. Walmart stock outperforms competitors on a strong trading day, so that was most recently. Um, China accuses Walmart of stupidity over missing Xinjiang goods. I'm not for sure how to pronounce that. Sorry. Um, China warns Walmart over alleged removal of Xinjiang sourced products from stores. I think Walmart's trying to do the best thing by humanity, and like I think the goods coming out of there, like it's very controversial. So okay, so Walmart stores temporarily closed for COVID-19 cleanings. Okay, um, you can look at this. So I think we are headed out of the. I hope we're headed out of the pandemic, um, and getting into an endemic. Post lockdown reopenings reduced cash flow. Okay. Sells multiple. Okay. Okay. So they benefited from smaller competitors not being able to deliver online. Um, Walmart's stock delivered a return of nearly 17% over the last 2 years. It earned all those gains between March and November in 2020. Of course. So yeah, we might see this kind of start leveling off because the smaller stores are opening back up. Smaller stores are also going online more. So we may see Walmart even struggle more on keeping revenue flows. So maybe not 20%. It's so hard to say. I think at max 20%. Like looking and thinking about all this, like yes, I think that at max a 20% increase, and I think your money's probably better. I think my money is probably better off somewhere else. But but I will always say this. Um, I'll pull this back up here. I will always say this. I'm not your financial advisor. You should do what you feel is right. Um, but with Walmart, I think that I'm not getting in. But I can't hit the sell button for you. I can't hit the buy button for you. You are your own stock financial advisor, and you should do what you feel is right. I don't see Walmart doing super great. I see other stocks doing super great in the near future. So take that for what it's worth, looking at the fundamentals for Walmart. And do that for every single stock you look at. You should be looking at revenue multiple, and then if revenue multiple is low or even if it's high, look at profit and see, okay, well, how is this company doing? What kind of percentage of net profit is there for this company? And then go off of that as well. And then look at catalysts. Look at what the company has going on in the future. Are sales going to increase? What's going to cause sales to increase? What's going to cause revenue flow to increase? Or is revenue going to drop down or sales going to drop down? And then you can expect that the stock price to kind of come down with that. So you have to take into consideration a lot. And that's looking at fundamentals. You can look at charts and all day long and expect that a stock is going to continue to do great based off a chart, but at some point it might not. At some point it has to kind of stop and level off, and then kind of come off of, if it's going up high, kind of come off of that high, uh, and then maybe the company turns around. So you kind of keep an eye on fundamentals as well, because things change with companies, obviously. So if you are investing, fundamentals are necessary. You need to pay attention to fundamentals if you are investing long term. And you need to keep an eye on fundamentals, not continuously. You don't have to, like, if you're investing, you don't have to watch the stock nonstop, but every week, every month, go and check and see what's going on with the stock, and if it's a good time to go ahead and take profits, or to gradually scale out, or maybe scale in more if the company is doing even better than what you thought they would. But go off of revenue multiple, of course, and then go to profit and figure out what kind of profit margin they have. That's important. And then what does the company have going on for its future? Are sales going to increase? Are they going to decrease? What is revenue? What are their revenue drives? And those things matter. Where are they investing? Where are they putting their money? Are they investing in their future? Are they thinking ahead? Those things matter. So, and with Walmart, there's a lot of things you could look at, and figure out where they're headed, what their mindset is. You can also go to SEC filings to find out what the company has been doing financially, and investors that own a percentage, like every investor that owns over 5%, they have to identify themselves and do an SEC filing to show that they own over whatever amount, over that 5% amount of the company. So there probably won't be too many of those for Walmart. So yeah, pay attention, please, to fundamentals. Don't think fundamentals never matter, because sometimes they do. A lot of times they do. If your stock is trading 20 times revenue and it's not getting a decent percentage of profit margin on that revenue, then it's time to be concerned. If they are trading like 20 times revenue and like 200 times profit, be careful. Please be careful. Okay, that is all I have. If this video helped you, be sure to subscribe. Also, you can go, let's look real quick. I want to show you this. We're going to go here. You can go to the Stock Voyager YouTube. Just go to stocks.yt. And if you scroll down here, you can get Stock Basics. This is like where I will put this video and other videos discussing stock basics. So you can go there. Also, you can look at all these other playlists, my new videos, stock picks, stocks that I'm looking at and considering getting in, that I like, will be here. Thoughts on the stock market and Bitcoin and the future of finances is here. And stocks that I think should be shorted that aren't going to go up much higher and will probably start to see a decline, I will put here. Okay, that's all I got. Be sure to subscribe. And yeah, love you all so much. And I will see you next time. Bye. Mwah.